A very good morning, everyone, and welcome to this live broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that are going to impact your trading day and also let you know what exactly is the trade setup we are staring at as we enter into this May series. Are we going to be marching towards and upwards from that 22,500 levels? That's pretty much the common consensus, we would say. But we also have other factors to be watching out for today. The second phase of our general elections here kicks off. Some big hot ticket contests as what we're going to see. The whole state of Kerala goes into poll and a couple of others, cities like Bangalore and the rest. So we are going to be keeping your eye out for that. But first, let me take you through all the top headlines. Now, key indices closed lower on Wall Street as the first quarter GDP growth comes in significantly below estimates at 1.6%. Futures on Wall Street, however, are rallying on strong earnings from Microsoft as well as Alphabet. Asian markets have opened higher ahead of Japan's policy decision, while the GIFT Nifty is signaling a mildly positive start for the Indian markets. And crude prices have gained about 1% after Brent hits $89 a barrel despite this US GDP growth missing its estimates. Gold prices remain largely range-bound, about $2,300 an ounce. Bajaj Finance's fourth quarter numbers miss estimates as the cost for funds raised. The funds have risen. The NBFC also requests RBI to review the curbs placed on its e-commerce as well as Insta EMI card business. IndusInd Bank, on the other hand, reported a mixed set of fourth quarter numbers. Tech Mahindra also reports a beat on revenue and the margins have come in line with street expectations. The CEO Mohit Joshi unveiled a 3-year turnaround plan for the tech company. And in key earnings today that we're going to be tracking, HCL Tech is expected to deliver flat revenue growth and a contraction in its margins for the fourth quarter. Strong volume growth and margin expansion is expected from Maruti Suzuki, while a new Nifty entrant, Shriram Finance, is expected to deliver healthy profit growth in the fourth quarter. And the second phase of the Lok Sabha elections begin with polling underway in 89 Lok Sabha constituencies across 13 states and union territories. Voting will take place across all 20 seats in Kerala. Bengaluru will also vote today. Well, we are entering the May series, like I told you, and what's going to be, will it be mayhem or will it be momentum? That's what we're really going to be gauging. And if we have to go by what the trade setup is already, well, we did see, pretty much above that 22,500 levels, which means that we could perhaps see upward swings from here. But let's not fool ourselves. We could also be headed for a correction before the next leg of up move. Now, that gives us a pretty good start. But let me also take you through some of the F&O cues and what those are suggesting. Well, if you look at the Nifty PCR, that one managed to jump to about 1.28 versus the 1.04 that we were placed on for April 25th. Now, this means that traders are selling more put options than the call options, which generally indicates that firm bullish sentiment in the market. But in terms of the stocks which are in that F&O ban list, well, NSE has gone on to put Vodafone Idea back into this F&O ban list for April 26. Remember, yesterday we did see the Vodafone IPO FPO hit floors, and it definitely came off with just a slight bit of premium of just about 7% when it did hit floors. But we did see some huge volume rush in that particular stock. So that one's something that you can actually be keeping out on your radar. But on the flip side, we did see NSE go on to remove Aditya Birla Fashion and Retail, a sale, as well as Hindustan Copper from the said ban list. Now, if you look at the fund flows and what that has been, well, not just for the April series, let's take you through the numbers for yesterday, where we saw FIIs net selling about 2,823.33 crore worth of shares. But it was the DIIs again doing all of that heavy lifting. 6,167.56 crore worth of shares. It is what the DIIs have bought. This the provisional data put out by NSE says. In terms of earnings that you need to be watching out for, like I mentioned before, HCL Tech, you have Maruti Suzuki, there's AB Sun Life AMC, there's Bajaj Finserv, SBI Life Insurance and Shriram Finance, that new entrant into the Nifty. So that's going to be interesting, especially the NBFC space is what we're going to be talking in detail about. And let's get going with that and discussing some of the stocks and strategies. With me today is Raja Venkatraman. He's the co-founder at NeoTraders. Good morning, Raja. Always a pleasure to have you on our show. Let's get this straight out because we had so many earnings that came off, and especially from the banking and financial space. Maybe before we get to the Nifty and the levels that we're supposed to be looking at for the May series, let's talk about these stocks in specific. Bajaj Finance, those numbers that came out, as well as what's happening with Kotak Bank and the like. How would you really be looking, your general view on the NBFC space? Is there reason to worry? Is there one should keep a cautious approach? How would you be looking at all these headlines that are coming in, and also the earnings that have come so far? They have been quite a mixed bag, we could say, at least from the financial pack.
Yeah. Good morning, Stacy, and thank you for inviting me to this show. So, first of all, let me tell about this NBFC pack. The NBFC pack has been waxing and waning and have not really caught on to the bullish momentum here. And when you are zeroing down on Bajaj Finance, you can see that the up move which we saw in the month of April has not really been able to generate enough momentum. So we saw that the rise which was happening in the month of April actually brought in some profit booking, and the sharp drawdown which the market witnessed, people were more than ready to go short in this particular candidate. Now what has happened is that the market has recovered, and this stock has also done so. Results seem positive, but then the result season, one of the caveat here is that many times positive results are also shown the door, and they are reacted. So we have to wait for the reaction of the market. So currently, based on whatever price action is indicating, it will need to move above 7,500 to really make a cause for the bullish purpose. Otherwise, again, it would be a sell on rise candidate as far as Bajaj Finance is concerned. And as far as the NBFC is concerned, we'll still need some more momentum from the Bank Nifty to move above 50,000, wherein I will see the NBFC pack stepping in. Otherwise, it's a ignored sector for now, and that will continue to be the case for the coming few days. Well, the result season can play and give some tailwind to this particular sector, and we can see some positive traction emerging in this sector as well.
Right. So results is something that could actually propel a couple of these stocks. But let me take you through what Bajaj Finance's Q4 numbers were like about. We saw them report a net profit of 3,825 crore rupees for the March quarter, this being a 21% rise, we could say, compared to the corresponding period of last year. Now, we did see the net interest income also grow by about 28% on a year-on-year basis, coming in at 8,013 crore for the quarter, but this being almost 7% below what was estimated. So pretty much not really meeting estimates, one would say, when it comes to Bajaj Finance. What is interesting, though, is that the company has requested RBI to go on to review those curbs that it had placed on it for its e-commerce as well as Insta EMI card business. And remember, this also comes at the back of the action that RBI has taken against Kotak Mahindra just 2 days ago, where they have also asked them to stop issuing new credit cards or even taking people on board through their digital app, that is a Kotak 811 app. So that's interesting that this space, like Raja was mentioning, maybe it's an avoid or maybe a sell on rise kind of strategy that one could use in the NBFC space. But let's also look at a couple of other stocks that will be a buzz in trade today. We did speak about from the banking space itself. We did have IndusInd Bank also that came out with its numbers, and remember this the IndusInd Bank registered about a 15% year-on-year growth. Their standalone net profit coming in at 2,347 crore rupees, whereas this was mostly driven by the lower provisions for bad loans as well as the higher pre-provisions in their operating profit. Now, their net interest income though increased also by about 15% on a year-on-year basis, coming in at 5,376.44 crore rupees. So that was where we stood with IndusInd Bank. We'll have to wait and see how the stock really reacts and whether the the street is giving it a thumbs up. Now, if you look at the banking space yesterday, in fact, both your biggest gainer and loser were from the space. You had Kotak Mahindra Bank, which hit the lower circuit on the back of the news, but you did have Axis Bank and the street giving it a huge thumbs up on the back of its positive results. So that was where we stood with banks. Let's turn focus towards the IT space then, because there again we saw Tech Mahindra come out with its numbers, which were muted and subdued, but we do have HCL Tech, which will be coming out with its numbers today. Now, if you go by Tech Mahindra's numbers, those ones we saw the consolidated profit coming in at 661 crore rupees, whereas this being quite a good rise up, we would say, of 29.5% over the previous quarter. Despite that weak top line, we are seeing that is boosted marginally by their income, because we saw their revenue from operations fall by just about 1.8% on the quarter-on-quarter basis, coming in at 12,871.3 crore rupees. So that was where Tech Mahindra stood. We also saw their CEO, that is Mohit Joshi, come out with a 3-year plan that they have for the company. So it's interesting what they really want to achieve with this 3-year plan, because if I have to go by what they're saying, what Mohit Joshi is really saying is that they are looking at bringing up, we saw their margins up by about 200 basis points, coming in at 7.4%, and we've not seen any other IT companies really post that. So what their strategy is, they say that by FY27, it is to get that top line growth above their peer average and the EBITDA margin also above 15%. So that seems quite like a big target that they have set out to achieve. And we'll have to wait and see whether Tech Mahindra actually goes on to get that. But let me bring Raja back on and ask him how he's looking at both these stocks, Tech Mahindra, and what the results have really come about, and also from HCL Tech, what can we expect? Because that one is quite interesting. It has got that big Verizon deal in its pocket, and which is why that one seems quite popular among at least the street when it comes to IT pack. And what would be your picks? Give us your view on both these stocks.
Yeah, so when I take a look at both these stocks have seen a sharp descent since the end of Feb. So you can see that the stocks have declined for more than 1.5 months. So, and the stocks have inbuilt lot of short positions. So we had reached a point of oversold level. So what you're now getting is an oversold bounce, and the kind of news flows that are tying up could help us trigger some momentum to the upside. Now, when you compare both of them, when you compare HCL Tech versus Tech Mahindra seems more pressured, and the rise in Tech Mahindra could be more labored. And like you rightly said, HCL Tech has reached a decent set of supports even on the higher time frame. Positive news flows are stepping in, and this could be a good time to look at HCL Tech from a trading perspective as well as from an investment perspective.
Right. So HCL Tech would be a preferred choice. Let me take you through what most of the brokerage estimates are saying about what they're looking at in their Q4 results. They are seeing perhaps a revenue that will remain quite flat despite their services business really supporting it. Profit too may be hit because of their product side of business, which could be a drag. This we're talking about their products and platforms business, or P&P business, which is expected to drag down the earnings. The revenue growth, though, could be driven by their services business, which, like I mentioned, could be boosted by that Verizon deal. So let's see what we're going to get to hear from HCL Tech. The management will be speaking at 6 p.m. today, and we will be getting you that management commentary if you want to do a look at what HCL Tech management has in store, has planned for the company. Let me also now, shift our focus towards the auto sector, because today we are also going to see Maruti Suzuki really come out with its results, and we'll be talking about how the auto pack as a whole has been performing so far. This will be the first. We've seen the two-wheelers come out with a mixed set of numbers. Bajaj Auto, for that matter, had a good way of showing how they're improving on the exports, how they have that how they are placed in terms of what they're expecting in terms of rural recovery and the rest. But will it be the same for Maruti? Well, we are expecting almost a 50% upside in their profits is what we're looking at. But let's address market open at this point. We are comfortably there, almost 22,600 levels is what we're touching with the Nifty 50 there, about just 0.1% higher, but above that 500 level mark is what we are comfortably sitting on. Even for the sensex, we are quite nicely poised above that 74,300 odd levels. So flat start, we would say, for sensex, but yes, there is a positive bias, of course, in both the benchmarks. Let's also look at the broader indices, because that's where all the action has been happening. The Nifty small cap index, in fact, hitting record highs. The Nifty mid cap index also at a 1 week high at this point. So the Nifty mid cap index also there 0.2% higher, almost 0.5% of gains for the BSE small cap index there. Then look at the sectoral indices as well and how those are placed. Bank Nifty looking quite comfortable above that 48,500 levels. So that's another resistance that it has managed to break and go above that 48,500 levels. So we could see fresher new highs that could be reported for the Bank Nifty, whereas the PSU banking index, this was among your top gainers yesterday. It is about 0.3% higher even today. The Nifty PSU index really pushing, we would say, have quite a bit of the the components of that index really taking it higher. The Nifty IT index also about 1% of gains right there at opening bell. So you have the heavyweights that are really pushing this index higher as well, the likes of an Infosys or the rest. And you have earnings to be falling back on. HCL Tech is what the street is perhaps putting their weight behind. So Nifty IT index there also in the positive. You have the Nifty Pharma index also closing to about 0.5% of gain. So Pharma also quite interestingly there in the green. FMCG and consumer, now those two baskets also seeing good gains today. Of course, we are sitting rightly placed on the second phase of elections, which it normally really drives these stocks or the components of these stocks, be it the FMCG or the consumption basket. And of course, the earnings that have come quite a mixed bag, but definitely something to be falling back on. So the consumption and FMCG pack also in the positive. The metal index almost 1.2% gains there for the Nifty metal index. So that one also seeing some good positive momentum in May. The auto index also quite positive. So pretty much all of your sectoral indices, at least for that matter at this point, all of them good and in the green, we would say, at the start of this May series. So let's see which of those stocks are really adding to those gains. Well, if your top gainers there on your screen, Tech, Mahindra, IndusInd Bank, Hindalco. So two of those from the earnings pack yesterday, a good set of numbers which the street is reacting to. You also have Adani Ports, Axis Bank and Power Grid among your gainers. Tata Steel, Tata Motors as well as ITC. All of this pretty much reacting to news, and we'll tell you Tata Steel in fact has some good positive news that is coming in, and which is why you're seeing that in your gainers list. Let's look at the laggards then. Bajaj Finance and Bajaj Finserv. So both your Bajaj twins back in the losers or the laggard list, and that perhaps because on the back of the earnings that we are expecting, and Kotak Mahindra Bank continuing to be among your laggards. Raja, let me come back to you quickly. These are levels you were looking at to start off for the May series, and how should one be planning their strategy now that we are comfortably poised about those 22,500 levels? So what would be the strategy for you, or rather what are the charts, the support and resistance levels that you would be tracking for the Nifty as well as the Bank Nifty?
Yeah, so when I take a look at the overall picture, and when I take a look at what Nifty has done since March, there has been sharp, jagged moves that we have seen, and that has really upset everyone's approach here. So what one should consider is that one should continue to look to book profits as they appear. but at the same time, they should leave some window open for some upside because right now the lower level seems to be holding on, and we can expect that the upward trajectory should continue, and especially sectors like the metal, oil and gas, and the auto sector seems to be firing on all cylinders, and pharma is also complementing them well. So these are the four sectors which I'm tracking quite aggressively. Yes, there was some spark which we saw in the banking space from the PSU sector, but then that will have to be tread with some caution right now. But then overall, I feel that the overall market seems positive, and on the upside in Nifty, I see a target towards 23,000 within the next 1 week, because the overall short position which got built in when the markets fell, right? Every time, whenever the market stages a rally, there is a immediate need to feel that the market has stretched beyond expectation, and there could be a possible reaction. But then markets are not giving any reaction. Instead, markets are taking every opportunity to use the dip to buy into. So I would look to buy on every possible dip. That's what I've been saying in all the previous shows as well, and I'll continue to advocate that as a strategy. Now, lower levels towards earlier support level was 22,200 to 300. The next support zone now is at around 22,400. I would continue to iterate that, look at every dip to buy into, and the sectors which are highlighted will continue to perform. Now, upside level is around 23,000 within the next 1 week, which I expect the Nifty to clock up, because A, short covering, B, some genuine buying, and with the Nifty clearing an important threshold at 22,500, I definitely feel that it could now challenge the highs at 22,800. That's going to be the first target. Then the next target will be 23,000. And yes, Nifty is definitely performing better than Bank Nifty. So one should, if you are an index player, Nifty should be the go-to place.
Right. So Nifty versus the Bank Nifty. You're liking the Nifty at this point, and 23,000 levels is where he's stuck that bullseye target for in the next 1 week. In fact, let's also talk about the broader perspective and where markets, and what's really going to give markets this swing. We do have a couple of macro factors to be factoring in. One of them being, of course, the elections. Today being the second phase of the election, we have another 5 more phases to go till the D-Day on 4th of June. But let's get a sense of how markets are taking this cue in. Joining me for that is Sushant Bhansali. He's the CEO at Ambit Asset Management. Good morning, Sushant. So good to have you on our show. Well, if you have to look at the couple of key factors that are driving the markets, we saw how that VIX index really gave us that googly a couple of days ago, and we said, okay, fine, the traders and investors have become complacent. Maybe they already know, they've already priced in what the outcome of these elections are going to be. But do you see for a short term the market rally immediately post the Lok Sabha elections? Do you think there'll be a run up, or do you think there'll be some more consolidation that we can expect before or that is already factored in, so then perhaps we're just going to see a slow and steady move from here?
Looks like the victory of the incumbent government seems to be present. And if there is any surprise on negative side, there is a larger and higher risk on that side. At the same time, if the market, I think, is pricing a good sort of seats to the NDA and looking at majority from them. But if it has a super majority of 400 plus for NDA, then I think we might have a small rally just post elections. But otherwise, anywhere between 325 and 350 seats to NDA, I don't think there will be any major rally because of that. But anything above 400 might take the markets to probably another new high.
Well, we've just started FY25, but if I have to just ask you, do you think we can expect double-digit returns in terms of our benchmarks in FY25?
It seems so, because while we had very good 8 calendar year returns positively after a long period of time of such high returns, but the earnings have been quite strong as well. And the market, if you look at Nifty, is not too expensive compared to the growth which it offers. Nifty is likely to offer about, I would say, a low double-digit number, say probably 12-13%. compared to high teen which we saw last year, but still it's a good double-digit growth. So markets are trading not more than 20-21 times 1 year forward. So from that perspective, at least the headline indices on large caps should deliver good double-digit growth in FY25 as well.
Right, so we can keep our fingers crossed for that, and perhaps there aren't that many big global headwinds that could deter the Indian market performance. Do stay on with us, Sushant. Then we get a couple of queries answered by Raja. Raja, we have Satya CK who's asking the view on Aster DM for the medium term. What would be your outlook on this particular stock? Aster DM is what he's asking.
Yeah, see, Aster DM has not been able to sustain the upward drive, and the recent price drop is clearly indicating that whatever gains it had made over the past several weeks is giving up right now. And I would say that yes, the sharp fall which we have seen in this week could be a signal to maybe exit. It's an exit clause which is coming up, and one should not be looking to average here, because that is the first initiative which one thinks of taking. So it's an avoid from my side. If you are looking at it as a fresh entrant, it's an exit if you are holding your position, and also an advice that do not average it at current levels.
Right, so do not average and perhaps exit is what Raja is suggesting when it comes to Aster DM. Let me also talk about a couple of stocks, and since we were talking about auto and that sector, we did ask Raja about how they perform. But let me get Sushant's view as well. We have Maruti Suzuki that is likely to put out its numbers to the day today. We are looking at a net profit soaring by about 50%, and this on the back of the surge of higher SUV mix from the company. The revenue from operations also expected to jump by about 21% to 38,772. Now, if you look at the brokerage estimate, what they are saying that Maruti has perhaps sold about 5.84 lakh cars in this fourth quarter, or the quarter from January to March. So that number also quite positively poised there. The EBITDA is expected to expand by a good 43% on a year-on-year basis, coming in at 5,047 crore rupees, whereas this higher share could really be attributed to this better mix of SUV sales, the price hikes that were taken. There was one in January, another one in April for a couple of their variants there. There's also good, set off from the raw material benefits that they're getting, as well as the forex movement that is going to help this EBITDA. If you look at the stock, that one has rallied a good 24% since January, pretty much outperforming the Nifty by about 3% of gains. So Maruti Suzuki, there are a couple of queries as well on that one. Let's ask Raja, how is one supposed to be looking at this particular stock, and also from the auto pack, does he have any favorites at this point?
Yeah, so yes, Maruti has definitely shown some good positive thrust, and since the beginning of this year, Maruti has been definitely on the radar. It's gone up by 3,000 points, and that's 30% from the beginning of the year, which is quite remarkable. Yes, many stocks have gone up, but then auto sector definitely was languishing at that point in time. Now, when you're taking a look at the other set of stocks, they are witnessing some profit booking, and like you mentioned, the two-wheelers which were outperforming the four-wheelers have now stepped back, and the two-wheelers, four-wheelers are taking over. Now, when I consider the four-wheeler space, I find that Tata Motors seems to be the next best bet if you do not want to get into Maruti, because Maruti, yes, it is poised at a very interesting point. But then what I find is that Tata Motors, after giving a good dip, it's showing some positive traction. Yesterday was a good session in Tata Motors, and Maruti results can also propel the positive sentiment in Tata Motors. So that will be the next bet which I will have from the auto space.
Right, Sushant, what about your view on the auto space? Do you think we should be looking at these bigger names, or even auto ancillaries have a part to play, and we could see some good momentum from there? What would be your picks?
Yeah, the cycle in auto has, I would say, just started this year, and normally we see a 2 or 3 year cycle. and hopefully in FY25 we'll be ahead of FY19 numbers. It is always led by OEMs first, followed by ancillary, and probably this time again will be the same. The ancillaries have not participated that well, especially those who have a good export mix in their revenues. So that is probably because of I would say some pain in the European territory, and even US probably thinking that the restocking is taking place is leading to that pain in that space. But definitely, I would say FY25 the auto rally shall continue, and auto ancillary at some point of time in this year will start participating that way.
Right, and since we're talking about auto space, I am getting a query coming in asking about Bharat Forge and how should one be looking at that particular one. Raja, if you would have a view on Bharat Forge, maybe we can help Alex out there, as well as RK. He's asking between Bharat Forge and RK Forge, how would you be placing them? How are they stacked up against each other?
Yeah, so when you are talking about Bharat Forge versus RK Forge, Bharat Forge seems to be much better placed, and after the strong showing yesterday amongst the auto space, this, yes, you could definitely add Bharat Forge also to that list. Now, what has happened is the prices have come into a very important resistance zone around the 1315 to 1325 zone, and that's where the test is happening right now. Well, the price supply could emerge at this level, and that's going to be the testing point for the day. Now, if this level is overcome, then I envisage a target zone towards 1450. One could also enter into a positional play because positive trajectory can open up for Bharat Forge. So we are entering into a good zone right now, and this should definitely be on the cards for every trader and for every short-term investor.
Right. Sushant, let me get your view on the IT pack then. Now, we've seen quite an uninspiring outlook, at least, that has come from most of these companies. We do have HCL Tech, which will be coming out with its results today, but at least for the bigger ones that have put out their numbers so far, do you think they're still not out of the wood, the IT pack? Do you think there is, it's a still stay away zone?
IT companies, if you look at they along with BFSI and FMCG, these are the three sectors which have been the laggards in the markets in the last 1 odd year. Probably IT has been a laggard for almost 2 years plus now. But there have been, I think, some bottom fishing which took place 6 months back. And most of the returns, probably half of the returns have been given up in the last couple of months. But if you look at the hiring trends, if you look at the deal wins, etc., we believe that FY25 should be a decent year for earnings. And somewhere during as and when I think company specific on a quarterly basis, as people start looking at better results, I think they will start delivering and have better investor participation in those stocks. So FY25 overall, I would say, should be a decent year for IT companies on markets.
Right, that's quite a contra call because everyone's playing that wait and watch game when it comes to the IT pack. But Sushant, also your view on Kotak Mahindra Bank specifically. Now, it used to be quite the favorite, especially among AMCs, and mutual funds really lapping up a lot of that. But after this news flow that has come in, how much do you think of an impact it is going to have on their performance, on their on their numbers per se? Does this curb by RBI really change much for them, or this is more of just a sentimental hiccup that we're going to see and the stock reacting perhaps in that way?
No, if you go by past experience of regulatory actions of such scale in other companies in the last 2 or 3 years, I would say that the performance does take an impact for some time. Hopefully, the infrastructure, IT infrastructure, which RBI has their own views, should be back in a decent time back. And, last time we saw the time periods have been between 7-8 months to as high as 17-18 months in terms of RBI again allowing the BFSI companies to continue the tech based products.
Right.
So we'll see how long it will take for this particular company, but it will be all dependent on how fast they are able to come back and move to RBI. That all is well.
Right, because we also saw that from Bajaj Finance yesterday, them asking RBI to, consider that review of the curbs that was placed on Bajaj Finance. Well, let's look at another stock, another sector that's quite interesting at this point, and that being from the metals pack. We did hear there was news flow that came in from Tata Steel, wherein they've said that they will go ahead with that 1.25 billion pound worth of investment for the Port Talbot furnace. Now, this is, they're going to be replacing two of those blast furnaces and commence the closure of the existing heavy end assets. Now, what they are going to replace this is with an electric furnace. Now, two of these furnaces, one will be closed in June as well as the other in September, is what the company has come out and told exchanges. They will also be putting out an option for an open voluntary redundancy scheme by 15th of May. Now, this is quite interesting because the management has been tied up in a scuffle with the union in the UK, and which is why we are going to see, perhaps some legal action also unfold on this part. But the announcement to shut these blast furnaces will go on to impact at least 2,800 jobs there. So that news flow, of course, a positive for the company because they are going on the path that they were looking to become more sustainable, looking at greener options, and which is why this step actually they are going through with this step going ahead. But let's look at the metal pack as a whole. Raja, what would be your view? We've been seeing Tata Steel, JSW Steel and the likes pretty much every other day on the, on our gainers list. So do you have a couple of picks from this pack, and what should, be the strategy when it comes to the whole metal index?
Yeah, so the whole metal index has been performing quite well, and Tata Steel definitely has a positive news flow, and there's movement in Tata Steel, there is movement in Hindalco, and all of them seems to be picking up quite well. But then amongst the metal packs, the ones which have performed consistently well is one is VDL, which saw a sharp move today. Also, it hit a high of around 405, and the other is Hind Copper, NMDC, SAIL. These are some names which have lot of traders patronage, and metal, considering the commodity correlation, will definitely attract some traders patronage because it's a very fast moving securities. So I would go with these names which I mentioned because they tend to move faster. Yes, Tata Steel is also one of the names, but it's a slow mover. So those who are looking to invest over in the metal space for the next, say, couple of months, then Tata Steel could be a good bet. Target towards 185 can be expected. But then a stock like VDL or a stock like Hind Copper, they are witnessing steady buying at lower levels like all the metal names and are also performing well. So that is my take on the metal space.
Right. Let me quickly push in a query then. We are getting Gyan Prakasham who's asking. He says that he holds BDL or Bharat Dynamics about 261 shares that he bought for about 1,920. This stands at a profit of about 8%. He's asking whether he should be booking profits or wait some more time. He wants to know what should be his strategy here.
See, one has to understand that, when you go to a higher time frame and you see the overall market from a higher perspective, the markets are actually laboring upwards over the last 4 months. So in the wake of such a scenario, one should definitely understand that there could come a time, like you mentioned at the start of the show, that there could be a price dip. The price dip will not dent the bullish progression of the market, but then it will definitely dent the profits which you have generated at the moment. So it's always advisable, book some profits, look at lower levels to buy into. There are a lot of stocks that are moving. Do not buy stocks that are actually falling because that means that nobody is interested in them. Instead, look at stocks that are rising, giving some brief downside. So what is the brief downside, if you may ask? I would say anywhere in the range of around 7 to 10% correction from the recent highs is a good enough reaction, and stock starts picking up again. Get back into the stock, and that's how you will be able to make money from this market. The market is going to remain positive. but it's also important for us to have some suitable pragmatic approach.
Right. Let me give Sushant the last word. Then, Sushant, what are the sectors that you're betting on for this fiscal, and a couple of picks within those sectors, and how would you be placing them in a pecking order?
So the three sectors which we believe will do well in the FY25 are BFSI, FMCG, and auto.
Right. So BSFI, FMCG, auto, these ones are the ones that haven't really given that much of a performance, but you are placing your bets on them. Well, seems like we're completely out of time at this point, but let me thank both gentlemen, Raja Venkatraman as well as Sushant Bhansali, for giving us their time, speaking with us this morning and giving our viewers, helping them with their queries as well as the perspective on where we could see markets headed in this May series. But for all of our viewers, thanks so much from everyone that puts this show together. Thanks so much for watching. Do send us your feedback, and let us know in the comment section below, and follow us at the link at the bottom of your screen. For rest of the updates, do stay tuned to moneycontrol.com as well as the Money Control app.